Hi, this is Carolina for the third time. For those of you who joined us a few minutes before, again, thank you so much for joining us. I recognize that everyone is probably burnt out, especially if you have been doing enrollments. It's been quite hectic for us here, and I can only imagine what's happening in your area. For this month, we decided to just do a webinar for our downstate folks. Usually we have our upstate folks joining us for the webinar piece, but we also have it in person for downstate. But given timing and everything, we decided that it was best just to do this via webinar. I'm super excited. I have here Patrick MAGI, who oversees our facilitated enrollment for the Age Blind and Disabled program, and he prepared like a really good presentation. It's quite long because applying for non-MAGI Medicaid and related programs is never that easy. But I think the key takeaway is that not everything he discusses is going to apply necessarily to the same client. Chances are there will be an issue here and there, but obviously he has to be comprehensive enough in order for you to understand what the issues and how to tackle them when it comes to income and the actual application. So without further ado, I'm going to turn it over to Patrick so we can get started. If someone can confirm that you can see my screen and then you can hear us, that would be great. And Patrick will take it away.
Okay, so hello, I'm Patrick MAGI, and as Carolina said, I am the program manager for the facilitated enrollment for the Age Blind and Disabled program here at CSS. As you can see now, here's a map of our coverage area. We have 8 agencies within our network, and we cover 32 counties. I'm not going to list all of them, it'd take too long. So if you are in any of these counties and you would like to refer, if you have somebody who's looking to apply for non-MAGI Medicaid and you'd like to refer to one of these agencies, here's the map. Some of you are from these agencies themselves. All right, to get right into it and try to move fairly quickly along, here's a little kind of flow chart that we created with the client first here on the left, and then whether they're applying for MAGI Medicaid or non-MAGI Medicaid. We're going to talk about the bottom path there with the non-MAGI Medicaid when you're going to enroll through the LVSS or HRA here in the city. Some of the categories are Age, Blind, and Disabled, Medicare Savings Program, MBI WPD, and some other programs, which we're going to show you real quickly in another chart next. And just to point out, as it says, Medicare Savings Program for the MSP, as we all like to say, you're going to complete a totally different application for that rather than the Access New York and the Supplement A.
And I promise I won't interrupt Patrick too much because I tend to do that. But I don't want to move from this slide without pointing out that for MAGI Medicaid, there is this age 65 exception, and I'm calling it like that. You'll never Google and find it anywhere. But the general rule is that when someone turns 65 and they're on the marketplace, if they may be eligible for Medicaid, they're going to be going through the local district. There's one exception where someone is over 65 and within the 5-year bar period for immigration purposes, and their income is at least 100% of the federal poverty level. Those individuals can actually purchase a QHP through the marketplace. Email me if you're confused about this exception, but just so you know, there is this possibility that someone who's over 65 can get a QHP through the marketplace, and that's because they're not eligible for Medicare and so on and so on. But I just wanted to point that out, and that's it.
Okay. So next, here's another chart kind of running down the different categories, MAGI and non-MAGI. Non-MAGI right. As you'll see, SSI recipients, state supplement only, those people receive non-MAGI Medicaid automatically. They shouldn't have to come to any of you to apply or anything like that. So they should get that automatically. Then you have the SSI related, which are the age, blind, and disabled. and then the ADC related, under 21 years old, parent, caretaker, relatives, pregnant women. There's also a COBRA program, Medicare Savings Program, AIDS Health Insurance Program, or AHIP, foster care, Medicaid buy-in for working people with disabilities, and the Medicaid cancer treatment programs. And then for individuals under 26 years of age who are in foster care, or who were in foster care, and were in receipt of Medicaid before they're on their 18th birthday, they will still continue to receive non-MAGI Medicaid until they are 26. So those are those categories. So we're going to get right into the application. This is the cover of the application, and the next few pages give you some instructions and also a list of documents that are needed when you apply. Citizenship documents, identity documents, these are those listed here, and then some examples of income documents listed here on this page. This is all within the application. So to get into the actual application, we first start with section A, where you're going to list the name, phone number, home address. There's a box right there under home address. If the individual is homeless, you're going to check there. If their mailing address is different than their home address, you'll fill that in. And then the optional box on the bottom can be filled out if they also would like correspondence to go to a relative, or even you as somebody who's helping them, an FE or something like that. In my program, some of our FEs do put their information there just in case, just to ensure that they do get notices and things like that, as long as the client and applicant says it's okay. Moving on to section B, you're going to list the name again, city of birth, state of birth, country of birth, date of birth. It says send proof, but you don't have to. Then and I'll tell you why in a moment. It's also, the other questions there are, is this person applying for health insurance? The person in box 1 should be the one applying. You may have a spouse or something like that in box 2, and you'll check if they are applying, yes. If they're not, no. Is this person pregnant, yes or no? Is this person the parent of an applying child? And what is this relationship to the person in box 1? If this person has or had public health coverage in the past, check the box that applies, and then write their, if they have it, their old SIN number below. Social Security number, and then citizenship. So with the Social Security number, as long as they have one, you put it in there, and Social Security will, or Medicaid, LDSS or HRA will try to verify that Social Security number. If they're able to verify it, there's no reason to provide a proof of date of birth. They'll contact you if they can't, and then you'll have to provide more documents. RFEs tend to just provide everything, and people usually want to give it to you, the date of birth, the Social Security card, etc. It's not necessary, but if they're going to give it to you when they apply, take it. And then the final box is for citizenship, U.S. citizen. The boxes are U.S. citizen, immigrant, non-citizen, and then you want to enter the date you received your immigration status. The third box is non-immigrant visa holder, and the fourth is none of the above. And as you can see, the note along the side there, PruCall are eligible for non-MAGI Medicaid. So to go into this a little bit deeper, this is that box right there, a little bit bigger for you there on the left. And then on the right are the instructions that come along with the application in regards to that box. I don't want to go, I'm not going to read the whole thing, because we'll, if I'm read it, it'll be forever. And then this is just showing you the threshold question, the initial question. Is there no status or versus some status? Are they a U.S. citizen, a visa holder, PruCall, qualified alien? And then, as you can see, some of the bubbles coming off of there, these may be some of the questions you might want to ask. Do you have a work visa? Do you have a green card, etc.? And you want to supply the proof for that, just a copy of that document. So now, Section C, which is income. You have earnings. To start from the top, you have earnings from work, unearned income, contributions, and other. You want to send proof. You have to send proof of each of those. On the top one, earnings from work. So if you are self-employed, you want to check that box. That's kind of the first star as you go left to right. And then the star all the way to the right, as you're looking at your screen, is no earnings from work. So, and then as you go along down the bottom, there's different boxes for each category. Check here if no unearned income. Check here if no contributions, and check here if there's nothing else. You want to check all those boxes. I'm going to go into a little bit more depth about the different types of income next. So first, earned and unearned. This income includes, as I said, earned and unearned. Earned income is derived from employment. It can be wages, salaries, tips, other forms of employee compensation, and self-employment income. Unearned is income derived from sources other than employment, dividends, interest, investment income, survivor annuities, unemployment compensation, SSI, Social Security benefits, etc. Okay, so the different types of potential income. You may have Social Security benefits that they're receiving through disability, retirement, dependent, survivors benefits, unemployment benefits, New York State disability benefits, which are different from Social Security benefits, workers' compensation, veterans benefits, retirement benefits, union benefits. Those are all different types of unearned income. Now for income, here's just some of the examples of documentation. Pay stubs for earnings, a monthly benefit statement for unemployment insurance benefits, award letters for Social Security, workers' comp, veterans pay, military pay, letter from an agent for royalties. Don't know if you'll see that very often, but. Now, if they're self-employed, and they're not going to have any of those other proofs that we mentioned, what they're going to want to provide is a federal tax return. Now, this can be used until March 31st of the following year. So, for example, the 2016 tax return filed in 2017 can be used until March 31st, 2018. So if they file it, they're self-employed and they file the tax return, this year in 2017, they can use that until March 31st of this upcoming year. It must be signed. That's really important. I can't tell you how many tax returns we get that are not signed, dated, and include all applicable tax forms and schedules. If they don't have that, there is an alternative. It's the self-employment worksheet. It's used when the applicant indicates that he or she does not file a tax return, the business is new and a tax return had not been filed, or last year's earnings are not representative of the current year's earnings. And they're pretty strict with that. If the person filed a tax return, they want to see the tax return. This is kind of, the self-employment worksheet is the last resort for the LDSS or HRA. I may forget to say HRA because my network is only upstate, so I tend to. So additional types of income and ways to document them are a letter from court or a statement from the person paying child support or alimony, a letter from renter or roomer or boarder for rent being received, a signed statement or letter from family member for support received by the applicant. Now that's like if the family member actually pays the applicant. In other words, they give them money to go buy their food, pay their rent, etc., then they would need that letter. Now there could also be the alternative where they're not actually giving the applicant money, which for the applicant's purposes is the best, and they would be paying the rent directly. The family member would be paying the rent directly to the landlord, or paying the mortgage directly to the company, or paying for food, like just going to buy the food and bringing it to the family member. That's, you know, in-kind support and doesn't count as income, so that would be better if they're doing it that way. Hopefully they are, and not this way. But if they are doing it this way, then they just need to provide a letter saying that I give my, you know, mom or dad or whoever $500 a month, and that's going to count as income if that's what they're doing. Then a statement or pay stubs for private pension or annuities, bank statements if there's dividends or things like that, interest.
And just to highlight that, if a client comes to you and says, my daughter gives me $500, any money that passes through their hands would be considered income.
Right.
If the client, after you explain the rule, says, my daughter buys me groceries, then that doesn't count, right? Daughter brings
Right.
groceries. Money does not pass her hands. So just emphasizing that point.
Yes, very important point. So now if they're living, so the applicant will have to complete a financial maintenance form when his or her monthly housing expenses are in excess of the regional maintenance percentage. In other words, their housing or expenses are in excess of what they get in their income. If they exceed the, so in Westchester, Putnam, the 5 boroughs, Nassau, and Suffolk, it is 70%. So if their expenses exceed 70% of their income, they need to provide a financial maintenance form. It's 60% throughout the rest of the state. So with the financial maintenance form, you want to provide your monthly living expenses, and on the right-hand side, there is an explanation of those expenses, and then sign and date.
Patrick, does the local district ask you for this in case you forget it, or would the advocate have to figure that out? And
They will ask you, yeah, but I mean, it's probably best for you to figure it out and do, you know, fill out the form. And I can give you the form so you can send out maybe with.
So I'll send the attachments to this form. So basically, the financial maintenance is relevant when you look at a client, you're completing the application, and all of a sudden, let's say the rent is $3,000, and their total income based on what they're reporting and have is $1,000. There's a huge discrepancy there where that may, or $500, where that may raise a red flag, and the local district will request this form to be completed because the story on the application is not making sense. In other words, they have way more expenses than what they're bringing in, and they just want to know how are they supporting themselves at that point. And again, this is where the previous slide comes in, where, oh, well, my mom gives me X amount of money, or so-and-so gives me X, Y, and Z, as opposed to like so-and-so pays directly for part of my rent.
Exactly. And it comes up more often than you realize. It actually comes up quite a bit. So we're going to move on to the next section, section D, E, and F. What we have here is health insurance, housing expenses, and blind, disabled, chronically ill, or nursing home care. And one thing to point out real quickly is if you are filling one of these applications out, answer every question. Don't leave them blank. Even if you think it doesn't apply, you can put NA or check no or something like that. Try to answer every question. I'm just going to highlight the important ones here for now since we only have an hour. So in section D, the most important is, does anyone who is applying have Medicare? So you got to check yes or no, and you have to send proof. They were the LDSS and HRA were not as strict on this before, but they have put out in a ADM and a GIST saying that now they're going to start being, for lack of better words, more strict in requiring this proof. So everybody's going to need to send proof that they've either applied and they've been approved or applied and been denied. It's going to be included in the recert. It actually is already included in the recertifications now. For people who didn't send proof in the past, they need to send that proof. And we could send that out too, probably. It'd be helpful.
Medicare Rights Center actually put it in their policy updates last month. So something new, as Patrick was mentioning, is that now when you get to this section, someone, let's say, who's over 65, that technically, in theory, should be eligible for Medicare, are going to have to provide proof, whether it's they applied and got it or applied and got denied. So this may kind of like put an additional task where you have to work with a client to make sure that they go and get that proof to submit it as part of their application to avoid back and forth.
Right. And then you want to include, in the second question, any other insurance that they may have, whether it be private insurance or a Medicare Advantage plan or Part D plan, something like that. You'll include that there. Housing expenses in Section E. And then the last two questions on this page, are you or anyone who lives with you and is applying in a residential treatment facility or receiving nursing home care in a hospital, nursing home, or other medical institution? Check yes or no there. And are you or anyone who lives with you blind, disabled, or chronically ill? Check yes or no there. Make sure you check both of those boxes. Moving on to Section G and H. G's additional health questions. They ask, this is the first two are basically for retroactive coverage. Have you incurred any paid, or do you have any paid or unpaid medical or prescription bills in the past 3 months or previous to those 3 months? You want to include that in 1 or 2. And then 3 is whether you've moved into this county from another state or New York State or county within the past 3 months. So you want to indicate that there. And then 4 and 5 is whether any pending lawsuits due to an injury or workers' compensation. They just basically want to see if somebody else is out there to pay for your medical expenses rather than them. And then Section H is the spouse or parent of anyone applying deceased. Check yes or no. And if they are, write in the name. And does a parent of any applying child live outside the home? Yes or no. And then if anyone applying is still married to someone who lives outside the home, check yes or no. You know, try to answer all 3 of those questions if any of those apply. And if the person is in fear of physical or emotional harm, you know, and does not want to provide that information about their spouse, there is a box there to check just to let the DSS or HRA know that too.
So Patrick, and I'm sorry I didn't read the fine print beforehand. So if I have a 70-year-old trying to apply, are they still providing information if their parent is deceased, or do they bypass that information?
Not if their parent's deceased, but if their spouse is deceased.
Okay.
Yeah. The parent would be for somebody who's under 21.
Okay, just making sure.
Yeah. And then Section I would be to choose a health plan. If they don't choose a health plan, they'll be auto-enrolled, which we would like to try to avoid. There's not, you know, this would only applies if for somebody who's not receiving Medicare. And, you know, for my program, I don't know that we've only seen probably in the 2.5 years, 10, 12. It's really not many that we see. But there are. Maybe there's more that we have. I just underestimating. But if they do, you know, if they do not have Medicare, make sure you fill out this section and have them pick a plan. This way they don't get auto-enrolled in something they don't want. And then Section J, make sure you sign and date. Now, the benefit of going with an FE is that when you meet with the FE, I don't know if this is a benefit, but I guess it could be as a benefit. So if you meet with the FE today, December 19th, that application doesn't need to be or better example is if you meet with the FE on December 26th, that application doesn't have to be handed in for 15 business days. And when it is handed in if it takes 14 business days and it's handed in to the DSS in January, the coverage will go back to December 1st. Now, if you complete it with the DSS, whenever they get it, whenever they receive it, that's when the coverage starts. So if you start it with them on December 26th and you don't complete it and give it to them until January 5th or 6th, your coverage isn't starting until January 1st. So it's kind of a benefit of using an FE. You kind of get a little bit of an extension in coverage to go backwards a little bit.
So if at any point you as the child advocate don't feel comfortable completing this application and you have to refer the client, as Patrick mentioned, you can refer it to an FEABD, and there's other agencies, and you might be one of those agencies in your area where, again, instead of sending in the client to the local district, it might be to their benefit to get help from one of these designated agencies.
Okay, now we're going to move on to resources, which is a lot more information, and hopefully we can complete it within half an hour. All right, so here we go. The Supplement A. This has got to go with every application, every non-MAGI application. It's going to be completed for individuals who are 65 or older, certified blind, certified disabled, not certified disabled, but chronically ill, institutionalized and applying for coverage for nursing home care. This includes care in a hospital that is equivalent to a nursing home, MBI, WPD program, if they're getting a spend down, if they're going to have excess resources, all those programs, you need to use the Supplement A. So we're going to go section by section. The first section is the applicant and spouse information. You're going to include the last name, first name, social security, date of birth, etc. Check yes or no if they're chronically ill. Check yes or no if they're certified blind or disabled. And they're certified blind by the Commission for the Blind and Visually Handicapped. And if yes, you need to send proof. And then the third question, if they're interested in applying for the MBI WPD program, if they're disabled and working, you need to check yes or no there. And if they are, no need to go back, that's fine. If they are applying for this program, I always advise people to write in big, bold letters that they're applying for this MBI WPD on the top of the application, first page, every page. It sometimes tends to get lost. The next page is about, basically for the nursing home, if somebody's going into a nursing home. So if an applicant is living in a long-term care facility or nursing home, adult home, assisted living facility, you're going to provide that information in the first section there. And you're going to provide the name of the applicant who is in the facility and all the facility, the name of the facility and the date admitted. Those are all very important. And then the applicant's previous address. Now, if this previous address is also a facility, just below that, where it says applicant's second previous address, you're going to indicate that there. What they're basically looking for is where they lived before they went into a facility, into a nursing home, because that's going to be the district of fiscal responsibility. So they may have lived in one county and now they're in a nursing home in another. The county where they lived before is going to be the county that's going to essentially pay for the nursing home care.
So Patrick, if someone was enrolled in one county and now in the nursing home, when they get their renewal packet, the new county where the nursing home is located would be responsible for processing their care, their application?
No. So, for example, if the person lived in Rensselaer County and is now in a nursing home in Albany, Rensselaer, everything will go through Rensselaer County. Like the renewal, the application, everything goes through Rensselaer because they're the district of fiscal responsibility. They're the ones who are going to be paying for it. So if they get a renewal while they're in Albany, that renewal goes to Rensselaer.
Okay.
Make sense?
Yeah.
Okay. And then the second is the applicant's spouse. Basically, they want to know here if the applicant's spouse is either living in the community or if they're in a facility themselves. And then the very last question is the applicant's spouse deceased, yes or no? And if yes, you need to provide the date of death and you need to provide proof. This is for the nursing home coverage. So for all other types of coverage, you don't need to. But for nursing home, if the spouse is deceased, you're going to need to provide the date of death and the death certificate. And then third page is going to be where you're going to indicate the type of coverage. So if you're applying for Medicaid coverage, but not coverage with community-based long-term care services, that's the top box. And you can just attest to your resources. All you have to do is write the information, and you'll see as we go along through this, we'll have screenshots of the whole application. All you need to do is write in. Now, if you're applying for coverage of for community coverage with community-based long-term care services, excuse me, all you need to document is the current resources, so a current bank statement, a copy of the life insurance policy, etc. Excuse me. So just to point out, checking this box does not give your client MLTC. Some people do think that all you have to, if you're applying for MLTC, all you have to do is check that box, and that's not true. This is services that are not included in MLTC. And then the final box is you are institutionalized and applying for coverage of nursing home care. So that's where you would check if the person is in a nursing home or has been placed in a nursing home. And the documentation here is of resources for the last 60 months. There's a 60 months look back period, it equals 5 years. So now there's been a little bit of a change. All DSSs at this point are using what's called the asset verification system. Some are using it more efficiently than others. That's just the truth. Some are not using it very well at all. And what this is, so if you're requesting coverage for community-based long-term care services or nursing home care, you only need to provide documentation for the time period indicated for life insurance policies, securities, stocks, bonds, and mutual funds, annuities, burial agreement or fund, and trust documents and accounts. So you do not need to send proof of any other resources at the initial application. So that includes bank accounts and deeds, essentially. So at the initial application, you don't need to provide proof of that. Like I said, some counties, it works better than others. Some are just requesting it anyway. Okay, so before we get into it, just to point out, only resources owned by and available to the applicant or a legally responsible relative are considered when determining Medicaid eligibility. You don't need to include resources that are owned, if they're owned or available to anybody else. Sometimes people love to just put anything that's like remotely associated to them, which kind of can tend to confuse the Department of Social Services. So it must be owned by and or available to the applicant.
Or the legally responsible relative, which is usually a spouse.
Yes, correct. So now to go into the supplement A little bit deeper here. Number one is in the resource and asset section is checking savings, credit union accounts, certificate of deposits. So the value is treated as a resource. The amount that can be currently withdrawn, it's typically on the first day of the month that they're applying. Penalties for early withdrawal are subtracted, and some of these accounts may generate dividends and interest. That will count as income, not a resource. Be treated as unearned income. And again, if you're applying for community coverage with community-based long-term care, you want to provide the most recent statement, copy of the bank book. For CDs, the most recent statement including maturity date of the CD. So that's if they ask for it at this point. So currently, they shouldn't even be asking you for this, for either 3 types of coverage. They should be able to verify it. If they can't verify it for community coverage with community-based long-term care or nursing home coverage, they're going to ask you for either the most recent statement or the 5 years of bank statements. But hopefully they can verify it and they're using the system. The next on this page is retirement accounts and annuities, stocks, bonds, and mutual funds. So annuities or work-related plans for providing income when employment ends. That's your retirement accounts. Examples are pensions, IRAs, 401ks, and KEO. If an applicant has a retirement plan, you want to ask if the owner is receiving regular payments, and if not, can they? That will count as income. And if they are not eligible for payments, is any portion of the principal available to them? A little bit more on retirement accounts. So the applicants who attest to the value of their resources and own a retirement account must verify whether or not they can receive periodic payments, because again, that payment will count as income, unearned income. The proof you can use for this is a statement from a financial institution or organization, whoever's paying the pension. Now, applicants who are applying for nursing home coverage, nursing facility services, or community coverage with long-term care must document the value of the retirement fund, if they are eligible for periodic payments, and if so, how much and when they would begin, and if the principal is available, and if so, how much. For example, is there a penalty or not? So I'll just point out each section here, and then we're going to talk about them in depth a little bit after this, after I go through each one. So the rest of them are life insurance policies, burial assets, burial contracts, trust accounts, vehicles. You want to list all that information here. So in the life insurance policy section, a life insurance policy is a contract between an individual and an insurance company. The individual pays a premium, and the company agrees to pay a specified sum to the beneficiary upon the death of the insured. There's typically a face value. I mean, there's always a face value. Sometimes there's a cash value. So before I go I probably should have done this sooner, but before I go any further, are there any questions? Okay. So I'm going to move right along. If there are any questions, I'll ask again at the end. If not, you raise your hand or type in a question at any time. All right, so moving along. There's 2 basic types of life insurance policies. Whole life, which has a cash value, and term life policies, which generally do not have a cash value. You'll only see a face value on that one, typically. So a life insurance policy may be treated as a resource if it has a cash value, and the value of that policy is the cash value.
Can you like explain the like lay
So,
terms for someone like me who does not know and obviously has issues because she should be fully insured now that she has a child? What is the difference between cash value, face value? I mean, I'm assuming you get cash. Anyways.
Right. So the face value is essentially what the insurance company is going to pay out upon your death.
What they agree to pay.
Right.
That's the contractual agreement amount.
Exactly.
Okay.
Now the cash value is something you could take out now, or take out like after on a whole life policy. It tends to your cash value will accumulate over time. So if I got one when I was 25 and now I'm like 45, 50, and I'm looking to go on a big vacation, well, maybe not a vacation, but you can essentially take that, whatever cash value it has accumulated, you can take it out. That's why it's considered a resource, because you can just take it out and it's yours at that point.
Okay, so for purposes of the application, if it has a cash value, it means that they could technically get it.
Yes.
And will that
exactly.
count?
That will count as a resource over $1,500.
Over $1,500.
Yeah, and the reality, we tend to see some policies that are really old, so the cash value is not that high.
Okay.
But $1,500 really, if you've had a policy for a long time, it's really not that high.
Okay.
Most are going to be above $1,500.
Yeah.
Especially for a whole life policy.
Okay.
Yeah.
Thank you.
So documentation for a life insurance policy is the policy itself, or a statement from the life insurance company, a local agent, or if a group insurance, it would be the employer's payroll office. Annuities can kind of sound similar to a life insurance policy. So it's a contract between an insurance company again, or other institution with an individual. Now the insurer agrees for a price to make periodic payments to an individual for a fixed period or for life. And the documentation for that would be the statement from the annuity issuer or the annuity contract.
And how do you usually get annuities?
Anybody really, anybody who sells in life insurance policies probably also do annuities too. And it's essentially just a different vehicle to put money in.
And then get it out.
And get it out, after 59 and a half, 65, et cetera, whenever you want to. Yeah. Stocks. So this is where an investor has part ownership in a company, the shares in the company's profits, and shares in the company's profits and losses. So the value of the stock is considered a resource. Dividends and interest may be paid to the owner, and that may be considered as unearned income depending on the level of coverage needed. So the value of the stock is the closing price on the date of application multiplied by the number of shares owned. And the documentation is a stock certificate or the statement from a stockbroker. Bonds. So bonds is a promise to pay cash at a future specified date. They can be municipal, corporate, or government. The stated value of a bond is paid at the maturity date. And the value of a bond is considered a resource. The interest may be paid to the owner, and that's considered unearned income. The value of a bond is the market or bid price multiplied by the number of bonds. So you can provide the actual bond or the bank or brokerage statement for documentation purposes.
On the application, are you figuring out what's the value at that point, or are you just providing documentation, or you're providing an estimate and then the local district is obviously going to verify?
They're going to verify, yeah. But if you have the actual bond, you're going to put the institution or company name on there where the bond is from. Yeah, if you want to go back. Perfect. Yeah, so one more, actually. Two, yeah. So number 3 is annuities, stocks, bonds, and mutual funds. So for all of those that we just mentioned, you're going to put the institution and company name, the account number, if applicable, who owns it. That should be the applicant or the spouse. The date that it was purchased, and the current value. If it's closed, the date it was sold, or the value at closing. That's typically if it's been like if they're applying for a nursing home and it's been in the last 5 years, or they just closed it like that month. You're gonna put that stuff.
And now, the statements that they get would have the current value.
They're gonna have the current value, and they can be really difficult to read. But just do the best you can. Like I said, the DSS or HRA is going to verify. If it's not completely clear to you, just write to the best you can what you think it is. So now mutual funds is a pool of assets that is managed by a professional money manager with a specific investment objective to make money. Value of the mutual fund is considered a resource. Dividends, interest, and capital gains may be paid to the owner, and that would be considered unearned income. I think in general, for most of these, that's one of the things you definitely want to look for, key in on. Is there any interest being paid, dividends being paid out to the owner? Because that's not going to be listed in the resource section. That's going to be listed in the income section. And the value of a mutual fund is the number of shares multiplied by the net asset value. And that can be found on a mutual fund statement. And for the proof, it's a brokerage statement, a bank statement, or the statement from the mutual fund company. And in doing these, I know this is some pretty heavy stuff. And in doing these applications, I think the most important thing is to look for these things, the values, whether there's dividends or interest. You may or may not remember what a mutual fund is or any of these kind of things, but at least you know what you're to ask for, and you kind of know what you're looking for, at least on the documentation, if you are filling one of these applications out.
Or even if you're not going to this step and completing this application because you rather refer it, knowing this information is important before you tell the client, oh yes, you should be eligible for Medicaid through the local district. Because once that client gets referred or comes to you and you start doing the application and you start asking these questions, you come to realize that they may be way above the resource or just above the resource, and now their feelings are crushed, their expectations were not realistic, as opposed to being mindful and careful that unlike MAGI, there is a resource test in the non-MAGI world. And for obvious reasons, right? Like this population tends to be highly costly, and we want to make sure that or the state wants to make sure that we're looking at all the resources to make the correct eligibility determination, and hence the 5-year look back and so forth.
Yeah.
So this information is good, even if you're not actually completing the application and you're just referring out.
Yeah, and 2 points to make on that. If you are referring, or even if you are doing the application, first and foremost, make sure they know you're not making the determination. Because people tend to think, like even my group as FEs, that they're making these decisions, and we've had to make it very, very clear that we are not making the decisions. We're helping them fill out the application. We're helping them gather all the documents, etc. And the Department of Social Services is ultimately making that decision. And there's exemptions for income and resources that I'm not touching upon here in this training, this webinar. So be mindful of that. And I would tend to lean towards doing the actual application and let the DSS make that determination, because even though you may think they are over resources or income, there's a chance that some of those exemptions apply and they could be eligible. And if you are referring, this is just a good overview of kind of the things you may want to tell them they'll need, kind of a document list, a checklist of things they want to gather before they do meet that person you referred them to. Okay, so now trust funds. Everybody likes to talk about trust funds. So it's a legal instrument created when one person transfers title to property to another to be held for the benefit of a beneficiary. We've all probably heard of a supplemental needs trust or a pooled income trust. It's kind of what we're talking about here, even though there's many others. The different types of property that can be included in the trust is real property, financial accounts, checking, savings, money market, etc., stocks, bonds, and any sorts of streams of income, things like that. So why trusts must be verified? So to determine if the applicant is the beneficiary, and if the beneficiary, then the income and resources may be countable. Now, if the applicant is the grantor, what their DSS and HRA are really looking at is to see if there's any transfer considerations. So a trust fund, I think I went backwards, sorry. These are different types of trusts. As I said, there's a whole bunch. Mostly, for any of them, you want to provide the documentation so the DSS or HRA can make the determination whether it's exempt or not. A lot of times we'll hear supplemental needs trust and the pooled income trust referred to in our area, and especially with the non-MAGI Medicaid. So those are the ones you want to be really aware of. So for documentation requirements for community coverage or community coverage with long-term care, for both of them, you want to provide the trust document, including the Schedule A, which is a list of assets and the current verification of each asset. And for nursing home coverage, you want to provide that, the trust document and Schedule A, and verification of current and closed funds for that trust in the past 60 months. I'd like to also point out, and we'll touch on briefly on prepaid burial agreements. So for all three types of coverage, community coverage with long-term care, and nursing home coverage, you must provide the trust documents and the prepaid funeral agreement. No matter the coverage, you have to provide those documents. So on the funeral agreement, which is a contract in which money is paid to a funeral director in return for furnishing specified services and or merchandise upon the death of the person to whom the contract pertains. These can be revocable or irrevocable. The irrevocable prepaid funeral agreements in any amount are exempt, are an exempt resource. This is why the DSS wants to see this and the trust, just to see if they are exempt or not. And the documentation is a copy of the prepaid burial or prepaid funeral agreement. Make sure it's the agreement. They're not going to, the DSS or HRA is not going to accept an interest statement or a letter, something like that. Like, it needs to be an actual copy of the agreement.
So just to be sure on this, if it's irrevocable, meaning that the person cannot retract it, it has to be a funeral agreement for their own funeral or their spouse. It cannot be for for my family, infinity, whoever dies first, right? Okay.
No. Burial spaces and plot. This is an exempt resource if paid for in full. If not paid in full, the equity value is a countable resource. So you want to provide the deed for the burial space or plot here. Burial funds. Any liquid resource that an individual chooses to officially acknowledge as a fund for the purpose of burial, and they will try to say everything is for burial. It cannot be commingled with other funds, so they can't have just one checking account and say my checking account is for my groceries, my rent, etc., and I'm going to use what's left over for burial. It doesn't work that way. It's got to be a totally separate account, and it has to officially be acknowledged as a fund for, as a burial fund. Banks will set it up. They'll put it on there that says that this is for burial purposes.
So this is great potentially for your threshold clients who may be just above the resource limit, and they say, well, let me set up a burial fund. And they go to the bank, not promoting any bank in particular, and they say, I want to put X amount and this is for the purpose. Can you do it and confirm? Yes. Just saying.
Yes.
Okay.
Yeah. Also, life insurance policies. You can indicate on the application that one of your life insurance policies is being used for burial purposes too. So, vehicles and automobile of any value may be exempt if in use. Second automobile may also be exempt. Recreational vehicles are not exempt. If they're not exempt, it's the equity value is the countable resource. This includes ATVs, boats, etc. And to document this, all they need is the Kelley Blue Book value or a car dealer statement or something along those lines.
If you get rid of the vehicle and you're applying for long-term care and the look back, and then you sold it, you would have to put in the amount you got for that extra vehicle.
Yeah.
Or that second vehicle.
Correct. And then
so takeaway, telling the client get rid of your assets, depending on their situation, may not be a good thing because, one, there's the look back period, and two, depending on the exceptions or the specific item, in this case cars, they may be better keeping that second vehicle because it may very well be exempt. Cool. So super careful. I can tell you that as a supervisor, I've had clients who call me and say, X advocate told me X, Y, and C. And, if they do take action, even if they didn't understand correctly, and sell their property thinking that that's going to help, you can only imagine how upset they're going to be. Or take other action that may be actually more harmful than beneficial. So as a supervisor, be extra cautious because no supervisor likes to deal with that. In general, be super cautious when dealing with these applications, and definitely do not give advice for clients to take action without, probably ever, but without being sure of how the rules work.
Yeah, there may be an exemption, and you don't want to have them get rid of it. It's noon now tonight.
So I hope I put it until 12:15, hoping that you guys would stick around. Obviously, if you have to go, I always like to be mindful. We will go for another 15 minutes.
Yeah.
And we hope that you can join us. And we really want to get eventually to the questions you may have and experiences you may have with this application. So we'll browse through the rest.
Yeah, there's not much.
Yeah, there's not much.
The rest is pretty quick. So next we have in 8, you just want to list any other resources that they may have. It could be anything from their baseball card collection that they're selling off. Yeah, people have collectibles and they like to sell them. Now if they're selling them, it's a resource.
But how is LDSS ever going to find out?
Well,
I mean, the client, of course, should. Okay, so.
That's a whole nother thing, but so really any other resources that you may have that they may say they have, you want to put in there. Homestead, which we'll touch on real quick at the end here, and then real property. So there is a homestead equity interest cap. So for some individuals, if applicant's equity interest exceeds $828,000, the applicant may be denied coverage for nursing home care and community coverage with community-based long-term care. So there are some provisions that will exempt that excess equity interest. I'm not going to get into those right now, but that's why it says the applicant may be denied coverage.
So when someone says, well, I only own one property, the follow-up question is, what's the equity in it? Or
yes. Yeah.
Even if it's just that one property, because
yes.
assuming that their
yes.
property is worth yes. more than, okay.
Right, like if you have $1 million piece of property that you paid off and you don't have any mortgage on it, there's no liens on it, there's nothing on it, then, you know, unless they meet one of those provisions or, you know, exemptions, then it's all, you know, the excess
will count.
Right.
Okay.
Yeah. So real property. Other than the applicant's home. So you're not going to list the applicant's home in this section. You're going to list any real property. Real property is land, and generally includes whatever buildings are on the land. So when real property is owned by the applicant, it is a countable resource. It is considered available unless there's a legal impediment to the liquidation of the resource. If there's any liens on it, things like that. As I said before, it can be just a piece of empty plot of land, you know, upstate in the woods somewhere, really, like that would have to be listed. If there's no legal impediment that exists, the equity value of the property is counted as a resource. The equity value is fair market value minus any liens and mortgages. Documentation of ownership is the deed, the property tax record, sales agreements, or real estate records. As I said before, with the new asset verification system, they should be able to, you know, don't need to provide proof of this. They should be able to look it up in their system and verify it. If they can't verify it, then they'll ask you for a copy of the deed or property tax record. So homestead, this is your primary residence, your applicant's primary residence. It's occupied, will be occupied by them or the members of his or her family. Homesteads include home, land, and integral parts such as a garage and outbuildings.
So let's say a person is in nursing home and they still own their home.
Yeah, we'll get to that.
Okay.
Yeah. Okay, so second, there's a question about life estates. A life estate is a limited interest in real property. Usually life estates are in the form of a life lease on property the person is using or has used for a homestead. The life estate is not a countable resource, though the DSS and HRA want to see if there's any possible transfer implications. So the documentation for this would be the life estate contract. So these next two slides kind of touch on what you were asking, Caroline, about the nursing home. So homestead is exempt as long as it is the primary residence of the applicant or a family member. Family members may include the applicant's spouse, minor children, certified blind or certified disabled children, and other dependent relatives. If the applicant or family member no longer resides in the home, the homestead may be a countable resource. As I said, may, and you'll see why in a second. Value of a homestead is the equity value. And again, this is deed, property tax record, and sales agreement or real estate records. So here's that exemption. Intent to return home. So for institutionalized individuals, this would be in the nursing home, when an otherwise exempt homestead is not occupied by a family member, the homestead remains exempt as long as the Medicaid applicant expresses an intent to return home. Intent to return home for these purposes does not impact the chronic care budgeting if the applicant expresses an intent to return home. So the homestead is exempt, and it does not require supporting medical evidence. You don't need to get anything filled out by the doctor saying that they're able or capable of returning home. All they have to do is say, I plan on going home. That's it.
And it's pretty like they'll honor it. So 90-year-old chronic terminal
going
illness
into a nursing home, and she's like,
says, I am going back home. Okay.
Absolutely.
Good. So everyone should be having the intent to go home, just FYI.
Yeah.
I'm kidding. But this is really good to know that there's no proof, as long as they intend to go back home.
I'm not guaranteeing that some DSS offices or HRA may be difficult about it, as we know they can sometimes be with certain things. So, you know, but yes, perfect world, that's how it works. Now this last page is for the nursing home coverage. If your applicant is looking for community coverage or community coverage with long-term care and is not going into a nursing home, you do not have to fill this section out. This is only for someone who has been placed in a nursing home or is, you know, going into a nursing home. This will be basically you're listing 1 and 2, A through G. I'm not going to go through each one, but it's just all questions about asset transfers in the past 60 months, 5 years, and just asking if you've transferred anything in that time period. And then the final one, G, is tax returns. They want the last 4 years of your tax returns.
Why 4 years and not 5 years? Because they're looking at the current income of
well,
just a year?
Because of when you file, so it would be like last 60 months would be 4.
Okay.
Yeah, I don't want to do that math.
Yes, yes.
So, Section H is important information. It has a little blurbs on each of these: liens on real property, transfer of assets, and annuities. So if your applicants have any questions about, which many do, about will there be a lien placed on my property or things like that, you can refer them to this section, about the transfer of assets, and then about annuities. There's obviously more information out there about these. This is just kind of a brief blurb. Maybe this will satisfy their questions. Oh, and then just to go back real quick, I is, again, signature and date. Make sure they date it. Make sure they sign it. It's really important. And then, so finally, real quick, just 2 quick slides on the Medicare Savings Program, a highly underutilized program. Like, I don't know why we should be getting so many more applications for the MSP and just don't.
So that's great, and I'm going to pitch my CHA side of it.
Yeah,
so whenever you have a client and you're evaluating, like usually the flag is over 65, age blind or disabled, but whenever you have someone over 65, you should be thinking, are they non-MAGI Medicaid or MAGI with that one exception? Do they qualify for Medicare? And now with the new rules, chances are that client is going to have to go get pre-screened to see if they qualify for Medicare and get that denial notice. And then do they qualify, if they do qualify for Medicare, do they qualify for this Medicare savings programs? And that's like the whole package. If someone does not qualify for non-MAGI Medicaid, then the question is, should they be applying for excess income, aka Medicaid with a spend down? Does that make sense? And if the answer, let's say, is no, but they do have Medicare, you still have that additional resource. Do they qualify for the Medicare savings programs? Because potentially the thresholds may be slightly higher for some of those programs. So always think of all those different components in your screening, pre-screening process and helping clients.
And
that's
then
my pitch.
be able to get their penalties paid for.
There's so many benefits to someone enrolling in the Medicare savings program, including enrolling outside of special enrollment period. Right. Yeah.
Okay, so here's just a real quick chart you can refer to. It gives you each of the MSP programs, kind of highest to lowest. So you have QI, Slim B, QMB, and then on the bottom we have Medicaid. So this first 2 columns show you the income limits for individuals and couples for each of them, and then the asset limits. So for the MSP programs, QI, Slim B, and QMB, there's no asset test. It's a pretty 2-page with the signature page on the back, 2-page application, really quick and easy. So just to touch on a couple things, for QI, it pays for your Medicare Part B premium. but you can't have both QI and Medicaid. You can only have one, or one or the other, because you could have Medicaid with a spend down, and the income limit on that is a little bit higher. Then Slim B, which pays for your Medicare Part B premium, and then you can have both Slim B and Medicaid. It would be Medicaid with a spend down. And then your lowest income threshold, QMB, which is pays for your Medicare premiums. You can't be charged out-of-pocket expenses like deductibles or cost sharing for Medicare covered services. And if you see providers who will participate in Medicare or in your Medicare private health plans network. And then also you can have both QMB and Medicaid. And then finally, there's the Medicaid income limits there, 845. There is a resource test and asset limit of $14,850 for individuals, $21,750 for couples. You can get Medicaid even if you have Medicare. You can have both. There's people out there who think you can't, surprisingly enough. If you qualify for Medicaid and have Medicare, you are probably also eligible for QMB. And if the income is too high for Medicaid, the client may qualify and benefit from Medicaid with a spend down. So those are all your programs real quick.
And we created this chart, and I have to give credit to MRC. I just added the description notes together. But because we get a lot of questions of whether someone can have Medicaid in one of the Medicare savings programs. So this is kind of your cheat sheet. I can put it in a one-pager and send it to you, or you can just print this slide. And hopefully I'll remember to update it for you to have it.
And then finally, this is the MSP application. Sorry, it's not super clear, but you're going to put the applicant's information and address on the top, in the top two kind of tables there. First name, last name, address, first name, last name, date of birth, social security number. Further down, there's a question about citizenship, the applicant's Medicare information, the spouse's Medicare information, whether they have it and what the effective date is. Do you or your spouse pay any health insurance premiums other than Medicare? Do you or your spouse pay child support? And are you requesting retroactive reimbursement of your Medicare premium? This is what we were talking about before. And then you're going to put your income on there. And so there is this, and this is like the one you got. I don't know where this comes from. So there's this legal sized MSP application that I've just started seeing where it has, for some reason, it has the listing of resources on the bottom. And I don't know why, and I don't know where this one has come from. But there is one without that too, a smaller one.
Okay,
yeah.
So we'll update this slide. I might have the wrong screenshot.
I've seen it everywhere. I don't know if it's something that just all of a sudden started being spread around, but anyway, there is another one where it doesn't, because as I said before, resources do not count for MSP. There's no limit. So yeah, we'll send you that.
We'll update.
And then on the second page is the signature page. It gets missed. We don't have a picture of it, but flip over this and there is a signature page. Sign it and date it. Make sure you do that.
Okay, thank you.
And yeah, that's it.
That's it. Thank you so much, Patrick. So I want to get any questions. I know we reached our 12:15. Any questions that someone may have? I think. So we do have a couple of questions. If an applicant 65 and over has a dependent who's a minor, can they qualify for Medicaid EP through the marketplace? So someone over 65 could qualify for MAGI Medicaid, assuming income eligibility, because they would be determined to be a parent, caretaker, relative. So the answer is yes. So again, this goes back to the question of like, when someone comes to you and says, I'm over 65, don't just assume that they're non-MAGI Medicaid, that they're going to go through the local district. You have to follow up with some questions. One, do they have any dependents? Two, what's their immigration status? Are they within the 5-year bar? Because they could potentially still go onto the marketplace. And going through this application, it probably seems more intimidating for those of you who have not done it than what it is. All of a sudden, the marketplace application seems a piece of cake. So let's be thankful for that to a degree. So yes, the answer is yes, someone who's a parent, caretaker, relative could get MAGI Medicaid. I have a client with cash value of $30,000. The amount that counts as resource is $30,000 or $28,500, which would be $30,000 minus $1,500.
Yeah, it would be the $28,500. I want to preface that with, like, just as you posed that question in those simplest terms, it would be that way. But you know, if you're doing an application for somebody right now, and I'm not actually looking at that life insurance policy, so I don't want to say yes for certain that's what it is. But in those, like, in terms of the questions in the simplest terms, if I was to give an example, yes, it would be $28,500.
And that's because of a deduction or
right, because so
exception?
$1,500 is exempt, and anything above that counts as the resource.
So,
but if you may, I mean, look, life insurance policies are not the easiest thing necessarily to read, so I don't want to, with the one you actually have in hand, don't quote me on that being
and if you ever, obviously if you are an FEABD agency, whether you contract directly with the state or you're associated with us, you know that at least us here at CSS, we go through the review process and the applications get reviewed. And for those of you who are neither, meaning you don't have a direct contract or you're not part of our FEABD program, if you ever have questions, you can let me know, and I can always reach out to Patrick or his team and say, can you just review this quickly to make sure we did it right? So we're happy to do that.
For sure.
How come Medicare.gov is showing resource limit for MSP individual resource limit 7390 married couples? So the question is, Medicare.gov is showing resource limit.
Well, yeah, because that's ultimately New York State has different rules. Each state is allowed to set different rules. That would be Medicare.gov comes out with the federal rules saying, like, this is like the minimum, et cetera, and then state can work within those guidelines. And New York State has chosen not to have a resource limit for the MSP program.
So that's really good to know. So if you read information elsewhere that the Medicare savings programs have a resource limit, know that that does not apply to New York State.
Yeah.
And clients may come to you actually with a resource saying, well, I don't qualify, or think that they might not qualify, and you want to pre-screen them. Any other questions? Let me see. I'm just trying to make sure I'm not missing any questions. So we try to do this within an hour and 20 minutes. As you can imagine, a very thorough with exceptions and all that. It could easily be a whole day training, meaning 2 days, according to Patrick.
I usually do the training in 2 days.
So he usually does this training in 2 days. As usual, there's a lot of takeaways. This is, again, I'm going to go back to the original slide. I'm super proud of my little flowchart, which will be improved at some point. In terms of when you're here, you have the client, you're trying to help them out, and your first row is MAGI versus non-MAGI. Do they go through the marketplace? Do they enroll through LDSS, HRA? What applications are they doing? Is it the online versus the paper application? And what attachments, Supplement A or the Medicare Savings Program application, do they have to complete? And the question is, are you helping them do that? Are you referring them? You get credit whether you help them complete the entire application, and we encourage you to do that to provide seamless assistance. But there may be times where it's too complicated, you don't feel comfortable, and you might want to refer out. And again, we only listed here those agencies that are associated with CSS. There are other agencies out on Long Island, I think it's NASA Suffolk, who also do this FEABD. So hospital counsel, we want what's best for your client. So you should be referring accordingly to what is best for your client. And again, it can get complicated, but hopefully once you step back, it's more manageable, and we hope this information was useful. Some of you know this back and forth and know a lot more than what we even presented, so we do recognize that. Again, we always struggle with providing a baseline for new advocates or for advocates who have not been exposed to this material versus providing stuff for advocates that have been doing this and could very well do this training. We thank you for your time, and if anyone has any questions following this presentation, they can obviously reach out to me. And I'm sure Patrick will be able to help me entertain any questions or answer any questions you may have. And a big thank you to Patrick, and happy holidays if I don't get to talk to everyone. Thank you.